copper prices at the moment are up nearly 5% on WTI, that's the US crude benchmark, and 3%. The prolonged conflict, that's the problem. The prolonged conflict, what does it do to that? Helima Croft, Global Head of Commodities at RBC. Now, the price that we're seeing at the moment, whether it's up 5%, 10%, whether we're near $80, this really is knee-jerk at the moment. What we need to see is what's sustained.
Well, Richard, I would say it's been a sharp run up and it's been quick, but we have a physical supply disruption right now. I mean, we have a situation where the Strait of Hormuz has been turned into an effective parking lot with very few tankers going through. We have Iraq now having to shut in vast quantities of its production. It's OPEC's second largest producer because they have no storage. So we are actually seeing physical disruptions of flows. The question is, what's the duration going to look like? I actually think that given the risk involved in this war, price reaction has been pretty muted. The question will be, will President Trump's assurances about, we will provide escorts through the Strait of Hormuz or political risk insurance, will that really be enough to make people incentivized to go through the strait in significant numbers?
Give me an idea of the sort of prices that we get concerned about. If we look at the way we're at the moment, 74.60 on the West Texas, 78.50 on the Brent at the moment. What numbers do we need to guard against in terms of wider economic implications?
I mean, I think for President Trump and for the American consumers, we always think about what is your pain point at the pump. And certainly President Trump would want to do everything he could to avoid a situation where you had $4 a gallon for gasoline. So again, that's why we're already getting these announcements, and they did cause prices to fall back. I think there are many market participants that believe this will be a short duration event and that President Trump will be able to get the flow of traffic through the Strait of Hormuz. I would just say we don't have a lot of details yet on this plan for the DFC to provide insurance. We do not know whether, this will be enough to move cargoes in large numbers. Your previous guest was right. They'll take any help they can get, the insurance industry, but how many ships will really go through? And we don't know yet how many naval resources the U.S. will be willing to deploy for the Straits when we're involved in active operations against the Iranians.
All right, so I just want to jump in quickly on that point. One of the things that I hadn't really thought about this until the last 48 hours, and that is because the shift to LNG, as a result of the shift away from Russian oil, now, of course, damned if you do, damned if you don't, LNG, Qatar, huge supplier, but the LNG is now a major problem, and we've seen LNG rising 4%, 5%, 6%.
I mean, look at European gas prices. I think that's actually a more accurate reflection of the risk in the system. I mean, Richard, you're exactly right. Europe is facing a significant energy shock because of this, because they have been weaning themselves off of Russian supplies. If you look at the UK, incredibly dependent on supplies of gas from Qatar. And so you have a twofold situation. You have the world's largest LNG facility in the world offline. It could be temporarily offline, but it was struck by drones and precautionary measures, it has shut down. And now we cannot move any Qatari LNG through the Strait of Hormuz. So you are absolutely right to focus on the economic threat to Europe. It is probably much more acute at the moment than what we're facing in the United States, because again, they've already moved away from Russia, and Qatar was one of the important backstops.
All right, is it for the oil companies, particularly the US companies, who will benefit from the higher prices as a result? But if we take, for example, oil and gas produced in the United States, there are no delivery problems for it. They are getting an elevated price for that because the market price is higher. The risk has not changed. Is that just a simple bonanza for US producers in that sense?
I mean, certainly U.S. producers had been concerned at the start of the year about the price outlook. Remember, we talked about U.S. production plateauing, talking about the price that President Trump wanted for oil was not really sufficient to have robust U.S. growth. And so, yes, this is a temporary, a little bit of a bonanza for these companies. More challenging are the companies that operate in the Middle East. And when I mentioned Iraq, Iraq is now shutting in its major oil fields because they have no storage. So depends on where your geography is in terms of your production for the companies.
I'm grateful. We'll talk more. This is not going to go away overnight. Thank you for joining me. Thank you.